Have you ever dreamed of a strategy that works in any market on any time frame, even with a tiny account? Well, stop dreaming, because today I will show you that it is possible. Here is the truth most traders won't admit. They're drowning in complicated strategies that leave them frustrated, stuck, and broke. And I know because I've been there. I blew up my first $1,000 trading account and I thought, I just need to know more. So I added more complexity, more indicators, and more confusion. And things only got worse. So I blew up my second account. Convinced the problem was me, I kept searching for even more complicated strategies. And all I did was losing money faster. That's when I met my mentor. He introduced me to the box strategy. Simple yet very powerful approach that finally made trading click for me. And it wasn't about adding more tools or chasing perfection. It was about clarity and execution. My mentor became later my husband, and together we optimized this strategy. If this strategy worked for me after years of struggling, blowing up accounts, and starting from scratch, I know that it will work for you too. So stick around, because I'm going to share with you the exact details and steps so that you can start using it today and growing your account fast. This box right here is going to solve 90% of your trading problems. It is going to show you where to enter, where to exit, and how to manage your trade in order to maximize your profits. Now, before I get into the details and each step on my live trades, I would like to give you the exact rules. So we want to be buying at the lower part of the box, and we want to be selling at the upper part of the box. This way, we're ensuring that we have minimal risk and great potential reward. If you're short selling, you want to be short selling at the upper part of the box and covering your short at the lower part of the box. We do not want to open position in the middle of the box. This is the mid-range, and this has a horrible risk versus reward 1-to-1, which is not a reliable strategy on the long run. So let's get into the trades. This right here is the TQQ, the Nasdaq leveraged ETF, and the 5-minute chart. You can use that strategy on any other instrument, crypto, forex, futures, and with any time frame. Now, these purple lines here represent the exact time when the market opens and the time when the market closes. Step number 1 is to draw the box. For that, I'm going to use the previous trading day, and I'm going to draw the box around the high and the low of that trading day, just like that. So now the next step is to wait for the market to open and to see if the price comes towards this zone. I like this zone a lot for a long, because as we can see, this zone is being supported by buyers. We see the price action here. There are a lot of wicks followed by a few green candles. There is a bottom forming, actually a triple bottom, followed by another nice reversal candlestick here at the close. So if the price opens here, I'm going to be looking the price action and buy around this zone in a very specific candlestick confirmation. Now I'm going to hit the replay button, and we're going to see what happens at the market open. As we can see, the market opened with 2 big red candles, and it tests immediately this zone. Now, I don't want to jump straight into that zone, because I don't know if this is going to hold or continue further lower. What I want to do instead is I want to see one green candlestick and the price going above that green candlestick. As we can see, we have now one green candlestick, and I'm going to place my order just right here above and my stop loss underneath. In this example, I'm going to use as a target the upper part of the box and observe the price action. Now I placed a buy order right here. I want to put my stop loss just underneath this candlestick. Step number 3 is managing the trade correctly. What I like doing is, especially when the price starts going towards my direction, is I like putting my stop loss towards break even. This way I am immediately out of the risk and I do not have to worry that this trade might turn around and turn into a losing trade. So I'm gonna go ahead now and move that stop loss towards break even. Let's see what happens next. The price starts going towards the upper part of the box, and as we can see, it starts to build a little bit of a wicks on the top. Now, this means that they could be potentially more sellers stepping in. And because my target is towards this part of the box, I am going to see if the price keeps going further or not. If the price starts pushing below these lows here of these two green candlesticks, I want to be out of this trade and realize my profits and move on with my day. Therefore, I'm going to move now my stop loss here towards the low of that candlestick. And now we're going to see what happens next. As we can see, I got stopped out and the price starts dumping immediately to the downside. Again, this is why it's crucial to realize profits and move your stop loss with your trade, especially if you are short-term trading. You do not want to turn a nice winning trade with unrealized profits into a losing trade. Now that I'm a few minutes into the day, I'm already done and I can move on with my day. And I will come back towards the end of the day to see what happens, see if I have new low and new high so that I can draw my box for the next day. As we can see, the market continued dropping and there were no more buyers here to be found. We broke below that range and below that box. Now, there were a few questions of what to do when we break below that range. And we have two options. Option number one is to trade towards the retest of that box again, or option number two is to trade in the trade direction. As we can see, these zones really act as magnets. The price is moving out and in that range, and if it breaks out of the box, typically it would retest that box. So that was the high and the low of the box. I'm drawing the box like that, and I'm going to wait for the next day to market the open and see what happens. If the market opens towards the upper part of that box, I would be looking for a potential sign if there are more sellers stepping in, and I'm going to place a short order. The reason for that is because I see the last 2 days, the market was struggling to break above that zone. As we can see, we have here a few wicks on the top of these candlesticks, and here's 2 candlesticks with wicks followed by a bigger flush. This means there are more sellers currently. Therefore, I'm going to wait and see if I'm going to get a short opportunity. If the market opens towards this zone or test this zone, I will be looking again for a buy. Now I'm going to hit the replay button and we're going to see what happens. As we can see, the market opens with a gap and it's already heading towards the upper part of that box. Now, I don't want to jump straight into the market. I want to see for one red candlestick and see if I have the opportunity to get in. That was a little too fast for me, so I'm not in the trade. Now I have to see if I'm going to get a second opportunity for a short and if the price is going to reject that zone again. As we can see here, I have another red candle, so the market is struggling to break through that zone, and it's actually giving me another opportunity, a double top. So I'm going to place a short order just below that candlestick. I'm placing a short right here, and my stop loss is going to place just above that candlestick. Now, because we see here a bunch of wicks on the lower part of this candlestick, this is for me a sign that we're holding this shorter term support zone. So you see a wick right here, a wick right here, and one more wick. This means there are more buyers stepping in, trying to protect the market to continue further lower. Because I don't want to give back the small profits that I already have, I'm going to move my stop loss towards this candlestick right here. And if the market reverses and continues further higher, at least I have a small profit that I can realize, and I will see from there if I have another opportunity for an entry. Now I'm moving my stop loss or take profit around this zone, and I'm going to hit my replay button again to see what happens. As we can see, I got stopped out here for a small profit. The market keeps trying to prevent the price of pushing further lower, and it actually is reversing towards the upper part of that box. As we can see here, everything starts to break out of the upper range. This means there are more buyers stepping in, and we see a little bit of a rejection here, but personally I do not like fighting a bull market. Therefore, I'm going to wait and I'm going to see how the market closes. A lot of times when we break out of this range, depending on where you're at on the bigger time frame, on the daily chart, you can position yourself in the trend direction for a swing trade. As we can see on the daily time frame, we're in an uptrend, and not only that, but we're actually at a very nice support zone. This right here was a breakout zone, and it's been tested now from yesterday, closing with a wick. This means on the bigger time frame, the market has the potential to reverse and continue further higher. So therefore, I do not want to fight here this bull market. Instead, I'm going to see if the market closes like that and position myself for a swing trade. So I hope that makes sense for you. If you have not subscribed to our weekly gains guide, where we send the weekly watch list with growth stocks and the weekly preparation for the market, feel free to do so. The link is in the description box. Thank you so much for watching, and I'm looking forward to see you back here again on our channel.